Welcome to Friday's Targets in Focus. I'm Elaine Stenson. The dollar strengthened broadly earlier after the US Congress passed a bill to reopen the government and raise the debt ceiling just hours ahead of a deadline to avert debt default. The deal will fund the government until January 15th and raise the government borrowing limit until February 7th. I'm joined now by Naeem Aslam from Ava Trade in Dublin to look at the dollar pair's forecast for the next 12 months. The pound dollar hit 161.54 during US morning trade, the pair's highest since October 4th. With this in mind, Naeem, what are your 1, 3 and 12-month forecasts for the pound dollar?
Thanks for having us again, Elaine. For us, the 1 month forecast for sterling dollar is 160, for 3 months 158, for 6 months is 157. Yes, you are correct that we have averted this big default. But basically, if you look closely, it is more of a ceasefire which has taken place because both parties were extremely tired. I'll not say there is any firm solution in place. In fact, the deal which both parties have actually they have agreed is extremely terrible, and it could actually do more harm for dollar in a longer term. And certainly the circus is going to return to Washington in February when we will have the debt ceiling issue emerging once again and the government shut down in January the 15th. So there could be another round of the similar situation emerging, despite the fact that President Obama is saying that nothing would happen. But what we are predicting is that the Fed may prepare for some sort of extra cushion if such kind of a shutdown does take place. They will kind of prepare for that kind of thing, which means that they will keep the door open for monetary policy easing and will keep the taps running. And the similar thing was echoed in Fed members Charles Evan. He kind of said the similar thing, that wait for the data to come. On the sterling side, retail sales are much better than the last month, and the jobless claim have fallen to almost the most in 16 years.
OK, and moving on now, the dollar moved to 8-month lows against the euro on Thursday as markets bet the Federal Reserve will keep ultra-loose policies in place to make sure a recent fiscal showdown won't hamper recovery. What are your 1, 3 and 12-month forecasts for this pair?
For 1 month, we're looking at 135, 3 months 132, for 6 months 130. The shutdown has cost nearly $24 billion for the economy, and the challenges which Fed will face will not only be limited to the unemployment rate, repairing the reputation and the economy lane. It is also going to perhaps preparing to accommodate for the debt ceiling circus, like I said, which is going to return in February. Therefore, loose monetary policy would possibly be in place for some time, perhaps at least till Janet Yellen takes over, which is going to be in March. So this would certainly push the dollar lower against the euro. But on the other side, a stronger euro is not a good thing for a weaker European economies. So we do expect that the ECB will step in and will do some sort of a monetary easing, or will do something to make the currency weaker.
And finally, Naeem, the dollar turned lower against the yen on Thursday, pulling away from 3-week highs. What are your 1, 3 and 12-month forecasts for this pair?
For 1 month, 98, 3 months, 100, and for 6 months, we're projecting 103. And now that we have a government open, so the Bureau of Labour Statistics has published a schedule for the data point that was missed during the government shutdown. The most interesting one will be the September employment situation, which includes the non-farm payroll, and this is due on Tuesday. Elaine, we would expect this data is going to be bringing a lot of volatility in the market, and then there will be a lot of talk over the next few weeks because then we have another non-farm payroll coming up in another 2 weeks' time. So the sentiment and the volatility in the market is going to be the main focus around this non-farm payroll. And in terms of a Japanese yen, S&P, they have already confirmed the rating for Japan, which is AA minus, but the concern there is the outlook is still negative.
Naeem, thanks for joining me on the line today as always, and that's all from Targets in Focus this week, but we will be back with more currency forecasts on Monday, so do tune in then. Have a great weekend.